Are you over 62 and thinking about buying a home or refinancing, but not sure how your Social Security, pension, or retirement savings will really be viewed by a lender? Before you apply for a mortgage, here are a few things that you absolutely need to know, because qualifying after 62 often works very differently than most people expect. Hey, I'm Julie Sabby with Vikings Homes, brokered by eXp Realty. I specialize in helping people 62 and over make confident, informed decisions when it comes to downsizing, buying a home, or accessing financing in retirement. Today, I'm breaking down the most important things to understand before you apply for a mortgage so you can save time, money, and stress. If you think lenders won't count your income because you're retired, that's not true. Here are some income types lenders regularly use when they're properly documented: Social Security, and in some cases, spousal or survivor benefits, pension payments or other guaranteed retirement income, retirement account withdrawals and required minimum distributions, annuities and certain investment income, part-time consulting or seasonal work. The key is showing that the income is reliable and documented for at least a few more years. This is where many people over 62 miss out. Before you apply, make sure you have recent statements, award letters, or 1099s ready so your lender can clearly see the amounts and the expected continuance. Many people assume that a long history of paying bills on time automatically carries them, but lenders look closely at your current credit score and recent activity to put yourself in the best position. Keep your balances low compared to your credit limits. Make all payments on time for several months before you apply. Avoid opening new accounts or closing old ones right before your application. Age is not a factor in mortgage approval. Credit health is. Lenders are focused on whether you've managed your credit responsibly lately, not how old you are. Your debt-to-income ratio is still important in retirement, but it can be calculated a little differently if you have significant assets. For some programs, if you use retirement assets to qualify, lenders may divide your eligible assets by a set number of months, often up to 360 months, to create an imputed monthly income amount. For example, if a lender uses a 360-month period and you have enough eligible liquid assets after your down payment and reserves, they can turn that into a monthly income figure for qualifying. Even if you're not currently taking large withdrawals, this can help you qualify for more than you expected, especially if you have few debts or a paid-off home, because your overall monthly obligations are lower. Here are some of the most common and helpful options for people 62 and over. Conventional mortgages, FHA loans, which can be more flexible on credit and down payment, VA loans, if you or a spouse served and are eligible, asset depletion or asset utilization loans that use your savings to help you qualify, bank statement or alternative documentation loans in specific situations, bridge loans if you want to buy before selling your current home, reverse mortgage purchase loans, also called HECM for purchase, if you want no required monthly payment. Each of these has pros, cons, fees, and long-term implications, especially reverse mortgage options, which typically require you to be at least 62, live in the home as your primary residence, and keep up on your taxes, insurance, and maintenance. The key is choosing what supports your lifestyle, cash flow, and long-term goals, not just what gets you approved today. Before you apply for any mortgage, step back and think about the long-term picture. How long do you realistically plan to stay in this home? How much of your savings do you want to keep liquidated and easy to access? And how will this decision affect your estate plans or the legacy you want to leave? Do you want to avoid monthly payment entirely, or simply keep up payments predictable and low? Your answers to these questions will help you narrow down the right loan type, down payment amount, and whether tools like reverse mortgages or asset-driven loans can make sense for you. Before you apply for a mortgage, let's talk through your options so you can move forward confidently. I offer a no-pressure consultation where we'll review your goals, go over the types of income and assets you have, and create a checklist of the exact documents you'll want ready for the lender. You can reach me at 763-257-7231 or email julie@vikingshomes.com. If this was helpful, please like, subscribe, and share it with someone who is planning a move after 62. And watch for my next video where I'll go even deeper into specific financing strategies like reverse mortgage purchases and how to compare them with traditional loans so you can choose what truly fits your retirement plan.